Hello and welcome back to The Note. There's been good news for the UK economy this week, but I'd like to question whether it really is good news. Inflation is down to 2%. That's exactly on the Bank of England's target, and it's the first time inflation has been that low in the UK since the end of 2009. Now that's a significant development because it means now that all the four main developed market central banks, the Bank of Japan, the Fed, the ECB and now the Bank of England, have inflation at their target of 2% or below. The question, however, is whether this is a sign of a job well done by banks targeting inflation, or rather whether it is a sign that they are losing their battle to counter deflationary forces out there in the world.
Many investors are very concerned about it. Apart from Japan, there's very few developed market economies where inflation is actually increasing at the moment. I think Japan is a big talking point because what Japan has done is essentially by devaluing the yen, it has exported deflation in 2013. And I think one of the big concerns is that it might continue to do so in 2014, and potentially that might begin to impact China, where there's been a build-up of capacity, and you could see how that whole story could then begin to get momentum.
Now, the area that causes the greatest concern is the economy where the central bank has done the least to try to push up inflation, and that is the Eurozone.
In the Eurozone, the drops that we've seen in inflation over the last few months I think are deeply disturbing because they're partly a consequence of an exchange rate that's probably too high. They're also a consequence perhaps of the ECB's either inability or unwillingness to offer significant monetary stimulus, but they're also perhaps a warning sign of some of the dangers associated with weakness within the financial system. Incredibly low inflation means bigger problems with debt, and European economies debt heavy already, so it makes it worse as a consequence of delivering these lower inflation rates.
It's not just that the Eurozone's financial system is weak, but that it has a lot of debt to deal with, and deflation would effectively make that debt that much more expensive.
Well, it's quite extraordinary because if you look at historical experience, we haven't had a situation where 5 years after the financial crisis, Europe has not worked out, or Euroland has not worked out its excess debt. That's a huge imbalance, and any glimmer of growth that has been achieved very recently after 5 years has been predicated on running incredibly high unemployment rates in the deficit economies. So the structural imbalances in Europe have not been worked out at all, and that makes this region very susceptible to following into the steps of Japan and their what turned out to be 2 decades of deflation.
Now, if you want an alarming parallel between the Eurozone today and Japan over 20 years ago when it was entering its decades of deflation, well, here it is. This is a chart that James McIntosh put together showing how inflation steadily fell after Japan peaked in 1990. And you can see that the progress for European inflation over the last 4 years is eerily similar. Now, there's another reason for some concern, which is that commodity prices are falling, as you can see from this chart, whether you're talking about industrial metals or agricultural products. Now, falling commodity prices aren't necessarily a bad thing. They mean lower prices for companies, and particularly if you're talking about falling oil, that could change the balance of global power. However, falling commodity prices are still a problem.
There's a very powerful long-run relationship between earnings growth and the ISM prices paid, non-core crude PPI, and commodity prices in generally, which is that earnings growth picks up when commodity prices pick up. And this chart goes back about 20 or 30 years. So I think if you want earnings growth, we need to see some industrial pricing power, and the commodity prices are a very good cross-check on that.
So why is this happening? Why are commodity prices falling?
Well, the big influence on that was China, and China actually had a terrible year for growth in 2013. We estimate our own real GDP for China, by the way, using entirely official data and doing what they claim they are doing, but we get a lot more volatile series, and on our estimates, real GDP growth in quarterly annualized terms in the first half of last year was below 3%.
So now, what do we do about it? This is going to create a very big problem for central banks.
The one biggest lesson of Japan was avoid a great big bubble in the first place. If you avoid that, then you've got fewer risks of actually succumbing to deflation later on. Actually, the West didn't really learn that lesson because in the period from, say, 2000 through to 2007, basically replaced one bubble in terms of equity prices, .com stocks, with another bubble in the form of property. And of course, that just leads to more and more resource misallocation and actually may lead eventually to the risk of deflation, even though that was the thing that central banks were trying to avoid in the first place. So I think they really have to be careful about the asset price part of the story, because if asset prices rise too far, there's return of leverage over the next few years in the financial system, then it points to another bout of economic instability. But this time around, there'll be far few weapons to use to deal with it.
So those are the problems. Effectively, we shouldn't have had an asset bubble in the first place, and we shouldn't be starting from here. I do think that, yes, there is a significant risk of deflation for the world economy. That doesn't mean, however, that it's inevitable. If US companies can start growing and spending in a way that really creates some kind of an inflationary pressure, deflation can be avoided. And the same is true if Abenomics succeeds in stimulating some real life into the Japanese economy, rather than just exporting deflation to everybody else. However, I think there is one thing that is very clear, which is that there is one region which is much more exposed to deflation than the rest, and which has much more to lose from deflation, and that's the Eurozone.